to Mark Gibson Shumaris channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
During our introduction, during our first session, I mentioned about bonds, and these are the your certificate of indebtedness, no? And then stocks would be your certificate of ownership. No? So let's discuss about the different terminologies that we commonly encounter whenever we discuss bond. No? So we have principal, the maturity date, par value, and the coupon. So principal, this is the amount of money on which interest is paid. And the maturity date, the date when a bond's life ends or matures. And the borrower must make the final interest payment and repay the principal. Par value, or simply the face value of a bond, which the borrower repays at maturity. Coupon, a fixed amount of interest that the bond promises to pay investors. And then we also have coupon rate, the rate derived by dividing the bond's annual coupon payment by its par value, or simply this is the nominal rate. No? And then coupon yield is also called as current yield. This is the amount obtained by dividing the bond's coupon by its current market price, which does not always equal its par value. When we say market price, this is the current price class. No, so remember when I also mentioned that in bonds there's secondary market where we trade these bonds. No, so in that secondary markets, that's where we identified the current market price, and also we have the so-called indenture. So indenture, these are the legal document stating the conditions under which a bond has been issued, or we can also refer to this as the covenants. No, basically this is the agreement. Okay. Now, when we say yield to maturity, it's just the same. No, so we're also still talking about bonds, but in this case, the intention is to hold it until it matures. No, so say for example, we have a bond. Um, that will mature in 10 years. So basically, your YTM, or the yield to maturity, is the interest up to maturity. So this is the estimate of return that investors earn if they buy the bond at P0. P0 is meaning the current price, and hold it until maturity. So I'm sure at this stage, you have, say, have felt that we're always looking into the investor side, no? So in YTM, or simply in bond investment, we're the investor. No, we're always talking about the investor's side, or investor's point of view. So the YTM on bond selling at par will always equal the coupon rate. Well, that's true. YTM is the discount rate that equates the present value of bonds cash flow with its price. Um, it's just saying that the YTM is basically it's the rate, or the required rate of return that equates the present value of the bonds with its price. Now, in ito na nga yung class, in bond valuation, we have this basic equation. Now, we've talked about this a lot of times, but let's have another example. No, remember when we're talking about P0, this is the price, the current price. No, so what we're going to do is we'll translate the numbers compounded by the interest, so that will identify the price today, no? So again, pag sinabing P0, this is the current price, no? This is the purchase price. Kasi pag sinabi na natin P sub 1, that will be the price next year. Kung naalala niyo yung mga discussion natin, no? Every time na meron nakalagay na sub 1, it will be next year, no? So therefore, pag P sub 0, this will be the purchase price today. Okay? So bond price is equals to present value of coupons plus the present value of principal. Assuming annual interest, but later on we'll discuss it and apply it with the problem. No? Okay, ito na. Discussion problem number 1. In January 2009, Worldwide United acquired a 918 coupon, $1,000 par value bond maturing at the end of 2019. So the required rate of return is assumed to be 8%. So isa-isahin muna nga natin. Yung 918, paano ba yun? Kunin ko lang yung Excel natin. Ha? So 1 divided by 8, so plus 9. In reality, that's 9.125%. No? Para lang din nakakalito. So that's 9.125%. That's the coupon rate. Again, this is your nominal rate. No? And then the 1,000, of course, yan na nga, yung par value or yung face value ng bond natin. And then it will mature by the end of 2019. So the issuance date is January 2009. Maturity date is end of 2019 or simply December 2019. And then we have the required rate of return, which is 8%. Paano ba yung required rate of return? Meaning, this is what you expect, no? As an investor, this is what you expect to earn out of this bond investment. Okay. So now we're being asked to calculate for the price of the bond. No? So paano yun? Gagawin natin ulit step by step. Para nakita ko nga pala the way you calculated for your assignment. No? So, well, I'm happy that you followed in fact, pati yung color coding natin doon, no? So, iba-ibang kulay. Pati yun na kinopya nyo hanggang doon sa solution. So, at least, napapractice, no? That's really my intention, no, in giving assignments. Kaya kung nakikita nyo, pag-assignment, unlimited submission. But dependent doon sa kung kailan yung sinubmit, no? Ang ginagawa ko lang naman is if you submit it a day before the deadline, then by all means I can review it and then you can resubmit kung may error, no? But of course, if you submitted it during on the day of the deadline, that's fine, no? Walang problema sa atin 'yun. Yun nga lang kung may error, hindi ko na ibabalik sa para makapag-resubmit ka, no? So that's that's my only requirement. No? But yun nga, yung sinasabi ko, happy ako kasi sinusundan niyo yung steps. Like I said, most of the problems that we have in financial market class or in capital market class, it's really procedural, you know. So as you notice, during the session, I made it a point to discuss the rationale and then proceed with the procedure, no, on how to go about these types of problem. Anyway, let's do problem 1. And then let's also do a step-by-step procedure, no, to calculate it. Pansinin nyo, class. Pansinin nyo na in calculating for P sub 0, kinukuha na natin yung compounded interest throughout the period plus yung present value of the principal. So in this case, the issuance date was January 2009, so beginning of the year. And then kailan yung maturity? Sabi 2019. So therefore, kailangan natin i-calculate from 2009 to 2019. Ito yung sinasabi kong gawin natin step by step, no? So in 2009, Anong formula lang natin is, of course, yung C, alam mo na yan yung coupon, no? So, that's the interest. So, that's 1,000 multiplied by 9.125%. Saan nga nakuha yung 9.125%? That's the coupon rate. Or it's also synonymous with nominal rate. No? So, basically, that's the rate um, in the face of the bond, no? So yan yung stated rate in the bond document, no? So 918 or simply 9.125%. So that's 91.25. So yun yung C, ha. Sa ilalim, yung denominator natin is 1 plus R. Ano ngayon yung R? That's the required rate of return, no? And then raised to the power of 1. Kasi yan yung year 1. Of course, pagdating ng 2010, that's year 2. Yun lang na bago. So same yung numerator mo kasi it's fixed naman at 9.125%. That's the nominal rate, no? That's a coupon rate and it's fixed, no, throughout the year. So meaning if you hold it until maturity, you're going to earn 91.25 dollars annually. Now, so ganun yung gagawin natin till 2019. Kung pansinin nyo, ang denominator, yun lang yung nagbago. Yung raised to the power of, no? So in year 2, so raised to the power of 2, and then year 3, year 4, and so on and so forth. No? Pagdating natin ng 2019, so that's raised to the power of 11. No? So basically, yun yung term. No? Now, kung napansin mo, dun sa huli, we also need to calculate the present value of the bond. So, paano natin gagawin yon? Baba ko lang yung given. Still, yung face value, that's $1,000. And then yung ilalim or yung denominator natin is the same, no? So 1 plus 8%, 8% again is the required rate of return, and then raised to the power of 11. 11 is the period from the date of issuance. So in this case, 2009, yung date of issuance natin until 2019. Okay? So ang pansinin mo, by the end, ano? So upon termination or upon maturity, we also need to calculate the present value of the principal. So now to calculate the price of the bond, we have to add all of this, no? So present value of the interest or coupon plus the present value of the bond itself. No? So that's 1,080.31. So inad ko lang lahat yan. 1,080.31. Ngayon class, in multiple choice problem, possible na ang itanong sa atin is how much is the present value of coupons in 2013? So yun lang, 62.10. But the requirement for discussion problem number 1 is to calculate for the bond price. No? So the answer is 1,080.31. Anong ibig sabihin yan? Kung naalala nyo rin during the introduction, ito yung usapan natin, no? The face value of the bond is 1,000. This is the face value, ha? Ayun. Ngayon, the purchase price is 1,080. Ano nga yung tawag dun sa difference ng dalawa? Anyone? May idea ba? Diniscuss ko to nung first session natin. O sige, okay lang yan kung hindi na maalala. So, we call this premium. So basically, the face value is only 1,000. But then we're purchasing it higher than the face value, no? So, uh, there's a premium of 80.31. Again, in accounting, that 80.31 will be amortized, no, throughout the life of the bond. Okay? So, sige. Pag-uusapan pa natin yan later as we go through the discussion. Okay? So, ito na nga, bond premiums and discount. So, what happens to bond values if the required return is not equal to the coupon rate? So, the bond's price will differ from its par value. Again, par value is the face value, no? So, in this case, yung 1,000 kanina, no? So, if the required rate of return is greater than the coupon or interest rate, the price is less than the par value. So, then we have a discount. So, syempre, opposite is the premium. Ngayon, kailan ba tayo bumibili at a discount? Kailan ba tayo bumibili at a premium, no? So, dependent on the required rate of return. Okay? Sige. Siguro isa pang example para lang at least mas ma-appreciate yung how to calculate bond price. But this time, lagyan siguro natin ng konting challenge. So this time, payment is being made semi-annually. So instead of just calculating annually, yung kanina kasi example natin is annual lang. No? Now let's do semi-annual, meaning twice ang bayaran. So um, if it's calendar year, so payment is made every June and December. Okay? Siyempre, pag quarterly, 4 times, no? So, March, April, May, June, then September, and December. Okay? Pero siyempre, like I always tell you, it really depends on the problem. But in this case, hindi kasi na-mention kung if it's a fiscal or calendar year, then we assume calendar year. Okay, sige. Wait nga muna. Ano yung difference ng fiscal at saka calendar year? May idea ba kayo? Sige, ganito na lang. Pag calendar year, yun, simple. January, alam mo yun, yung normal na calendar year, so January, Feb, March. Pag sinabi kasi nating fiscal year, it can start at any given month. Pero syempre, 12 months pa rin. Sabihin natin nag-start ang June. So June up to May, yun yung cycle, no? So that's 12 months, no? But well, like I said, fiscal year, it can start at any given month, no? Kailan ba ginagamit ang fiscal at saka calendar year? Again, it depends on the corporate reporting. Depende yan dun sa kung ano yung say agreement, no, nung or being imposed by the boards, no. So usually naman it's calendar year. The reason being is well, to follow on the government reporting. Kasi syempre, no, as financial accountant or accountant in general, we have to abide by the certain government regulations, no, certain government policies. No? Well, anyway, let's do discussion problem number 2. So, value a treasury bond with par value of $1,000 and maturing in 2 years. So, at least ito 2 years lang. No? So, we have a nominal rate of 4% and the rate of return R, di ba? Sabi natin pag R, that's the required rate of return of 4.4% per year. Assuming payment is made semi-annually, calculate the price of the bond. So nakita mo na ilang problems tayo ngayon. So 9 lang naman yan, pagtsagaan natin. No? So let's do problem 2. Lagay ko dito yung formula natin and then ito yung problem. At least ngayon, meron lang tayong 2 years. But again, in this case or in this problem, payment is made semi-annually. Ano lang yung naiba? Doon lang tayo sa naiba ha. Instead of simply just putting 4%, yun yung coupon rate, no? Remember yung C dito sa taas, this is the interest, no? Or simply coupon. So we calculate it by multiplying 1,000. 1,000 is the face value multiplied by 4% or the coupon rate. Yun na, no? But this time, since it's semi-annual, kailangan natin i-calculate for first half lang, no? So dinidivide ko by 2. Yun lang yung naiba. Kasi semi-annual divided by 2. Paano kung naging quarterly? So divide by 4. So yun lang na iba ha. And then also yung denominator, simple, ganun din. Dinivide ko lang by 2 kasi nga semi-annual. Okay? So meaning, ito yung year 1 natin. And then this is year 2. Paano yung calculation sa year 2? Yung instead na yung term, 'di ba? Raised to the power of this one is 1. Ganun din, 2, 3, and then 4. Kasi we're doing 4 payments or equivalent to within 2 years, we're actually doing 4 payments, no? Kasi nga semi-annual. Yun lang yung nabago. Dinivide lang natin yung rate by 2. Also, we have to get the present value of the principal. So that's 1,000. And then yung sa ilalim, divide by 2 mo pa rin. And then raise to the power of 4. 4, kasi nga, 4 payments in 2 years. Dahil nga semi-annual. Again, add the present value of the coupons plus the present value of the principal. And then you will get the total bond price. That's 902.42. So in this case, class, the face value is what? 1,000. But the bond price is 992. So therefore, in this case, we have a discount, no? 7.58. Okay, so that's bond valuation. Okay. So, well, the rest of the discussion in bonds will be more on theoretical part na, no? So, stay with me. Economic forces affecting bond prices. So number 1, time to maturity. So the bond prices converge to par value plus final coupon with passage of time. Again, parang it goes without saying that the longer the bond, of course, the higher the risk of default, no? Yun yung pinag-uusapan natin during session number 2 sa determinants of interest rates. And therefore, it affects the bond prices. Of course, in terms of the interest rates, the bond prices and interest rates move in opposite directions. And the changes in interest rates have larger impact on long-term bonds than on short-term bonds. Kasi usually, the longer the term of the bonds, the higher the interest. Kasi nga, di ba yung pinag-usapan natin sa determinants of interest rates, we have different factors affecting interest rates. And one of those factors would be the default risk or the risk of not being able to pay. No? And it's really prominent within the bond investment kasi nga it's usually for a long term. No? Kasi usually pag sinabi nating bonds, it's long-term investment, no? So pag sinabi kasi natin long-term, ang basic ano lang naman diyan, ang basic parang rule of thumb is more than a year or longer than a year, no? So primary market versus secondary market. Uh, oops. In primary market, the initial sale of bonds by issuers to large investors or syndicates. So meaning, um, this is the point where ito yung kung saan nag-originate. No? So that's primary market. And again, secondary market, this is where trading happens. So trades in the secondary market do not raise any capital for issuing firms. Kasi nga, in secondary market where it's being really a trade of interest na lang eh, no? So I mean really a trade of gains or losses, no, in terms of the market price. So type of bonds by issuer. So we have corporate bonds, usually with face value of 1,000 pesos and semi-annual coupon, so meaning semi-annual payment. So bonds if maturity is greater than 10 years and notes if the maturity is less than 10 years. Ito lang naman yung tawag, no? So it's bonds or notes payable. Municipal bonds issued by local and state government. Interest on municipal bonds is tax-free. Treasury bonds, if maturity is less than 1 year, we call it treasury bills. If 1 year is, if 1 year or less than maturity or less than 10 years, we call it treasury notes. So, para silang treasury bonds, no? Nagkakaroon lang ng, say, distinction in terms of maturity. If it's less than, if it's greater than 10 years, we call it treasury bonds. And again, treasury bonds are, ito di ba sinasabi natin na guaranteed yung payment kasi nga it's the government who issues it. No? So again, it's used to fund budget deficits. Okay. Oh, so type of bonds by features naman. So we have fixed versus floating rates and secured and versus unsecured bonds. Pag-usapan natin to. So floating rates, floating rate bonds, coupon tied to prime rate or LIBOR, treasury rate or other interest rate. So floating rate, we have benchmark rate plus spread, and floating rate can also be tied to the inflation rate. So basically class, fixed versus floating rates. Fixed is yun na, kung ano yung naka-state dun sa bond document natin, that's it. If it's floating rate, so therefore, it's driven by the market rates, no? So kung ano yung rate ng compared with other securities in the market, that will be the rate for the bond, no? Okay. So next we have secured versus unsecured. Ito naman, well, by the name itself, no? Pag sinabing secured, meaning there's a collateral. And then if it's unsecured, meaning it's just based on trust and confidence by the between two parties, no? So parang ano to, test of credit standing, no? So we also have zero coupon bonds which pay no interest, also known as discount bonds or pure discount bonds, no? It's sell below par value. So sample is treasury bills and strips, no? Convertible and exchangeable bonds. Ito, paano yung convertible and exchangeable bonds? So convertible bonds, in addition to paying coupon, offers the right to convert the bond into common stock of the issuer of the bond. Sige, ito muna. Pag sinabi natin convertible bonds, di ba, class, I think, paulit-ulit ko nang sinasabi, no? Pag sinabi nating bonds, this is the certificate of indebtedness. And syempre, pag stocks, ito yung certificate of ownership mo. So, sinasabi lang ng convertible bonds is meron kang option to convert the value of your bonds into common stock. Now, what is exchangeable bonds? Are convertible into shares of the company other than the issuer. So meaning, pwede naman itong ma-convert to another common common shares, no, of the another company. So it really depends on the covenant or yung agreement niya, no, within I mean upon signing bond agreement. Okay. So next we have callable bonds. Bonds issuer has the right to repurchase the bonds at a specified price or call price. Firms could retire and reissue debt if the interest rates fall. Putable bonds, the investors have the right to sell the bonds to the issuer at the put price. O ganito lang naman yan. Pag sinabi nating callable or putable bonds, basically there's part of the agreement where you can repurchase it, no? Syempre, at a future specified price, no? Uh, it could happen within the secondary market, no, but like I said, it depends on the agreement, no, by the parties. Okay, next we have protection from default risk. Sinking fund provisions, the issuer is required to gradually repurchase outstanding bonds. Protective covenants requirements the bond issuer must meet. Ito na nga yung pinag-uusapan natin kanina na mga covenants, no? Basically, this is just the agreement between parties, no? So, pag sinabi natin namang protection from default risk, so 'di ba pag default risk, this is the risk of non-payment, no? In this type of bonds daw, uh, there's a sinking fund provision. So meaning, um, hindi pa nagmamature yung bond, you are being required to deposit money, no, as sinking fund, no. Basically, that's within agreement or covenant nga na sinasabi natin that will protect from default risk, no. So it will protect you from non-payment of the bond. Okay? So, bond ratings, ito naman class, I'm sure naririnig nyo palagi ito, no? Especially in the news right now. Pre-pandemic, yung Philippines is parang na-upgrade yung ratings natin, no? So it's also the same pag naririnig natin to mga ito kasi yung mga agencies, no? These are agencies that provide say ratings for country kung nasaan na sila dun in terms of credit. Syempre, kung nandito ka sa investment grade, there will be a lot of opportunities for you for investors to invest, no? Sa investors to invest in the country. Kaya nga pre-pandemic stage, nandito na tayo eh, no? And junk bonds, usually, pag nandito yung rating ng, say, company, this is, I mean, we only enter into investment in these companies if you're, say, if you have trusted individual within the company. Kasi nga, usually, ito yung sinasabi natin mga non-collateralized loan, no? Ito yung based on trust and confidence lang. Actually, that ends the first part of our discussion.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!